Nearly $2 billion flooded into crypto in the last 24 hours. The institutions are moving.
2 billion? But I thought sentiment was at an all-time low. Isn't everyone panicking?
That's the twist. Retail sentiment just hit extreme fear while smart money is accumulating. It's a huge divergence.
So what's causing this split between institutions and retail traders?
4 massive narratives are reshaping the market right now. Let's start with the institutional elephant in the room. Tether just dropped $779 million on over 8,800 Bitcoin.
That's a huge buy. Is that just a one-off trade?
No, it's systematic policy. They allocate 15% of their quarterly profits to Bitcoin, creating a structural demand. And get this, Circle simultaneously minted $1 billion in USDC on Solana in just 9 hours.
$1 billion in 9 hours? That sounds coordinated, like a big New Year positioning play.
Exactly. Combined, that's a $1.8 billion liquidity injection, which points to the next seismic shift.
Okay, what's the second major narrative here?
Centralized infrastructure is exploding. Exchanges, neobanks, launchpads, they are seeing historic mindshare expansion.
Any specific numbers on that growth?
Centralized exchanges alone surged 64%. Capital is flooding into regulated, scalable platforms.
So the money is moving from speculative DeFi back to proven, compliant infrastructure.
Correct. In 2026, compliance and scalability will capture the institutional wave.
Makes sense. You also mentioned token launches. How does that fit in?
It shows the market is maturing. Take Lighter's LIT token. It dropped 8% post-launch.
Why did it fail? Was the tech bad?
No, the tech was fine, but 50% of the total supply was allocated to the team and investors. The community rejected it.
50%? That's a huge red flag. So fair distribution is now a critical factor.
Absolutely. Now contrast that with Bitlight. Their token exploded 294% in the same window.
Wow, what did they do differently?
A strong utility narrative, chain-link integration, enhanced smart contracts, and attractive staking yields. Real use cases won.
So the market is rewarding real utility over pure hype. What are the other key catalysts we should be tracking?
3 things. First, Ethereum scaling is accelerating hard. Layer 2 costs are already down 90%. Second, regulatory clarity is finally arriving. New CFTC leadership and pilot programs are de-risking the asset class.
And the third catalyst?
That sentiment divergence we started with. The Fear and Greed Index is at 21.9. Extreme fear.
Extreme fear, yet institutions are pouring billions in. That feels like a classic pre-move setup.
Precisely. $2 billion just declared confidence in crypto's core infrastructure. This divergence won't last.
This is all moving so fast. How can our listeners possibly stay ahead of these critical shifts?
That's why we're here. Subscribe and hit like for updates every 12 hours. We keep you ahead of every major move.
So the takeaway is to watch the institutional flows, not the fear index.
Yes, when retail sentiment catches up to these fundamentals, volatility will explode. We'll be back in 12 hours.